Let's talk about what's happening. Major indexes trading down today, as we just said. That's after escalating uncertainties surrounding the coronavirus sent markets tumbling by more than 1,000 points yesterday. A lot of investors are concerned about how this is going to impact their retirement savings. Who best to ask than Suze Orman? Joining us now to discuss all of this is author of The Ultimate Retirement Guide for 50 Plus. Suze Orman is here. There's so many places to go with you, but for those of us who are 50 plus, this is scary. How would you advise some of us?
Well, what's interesting is that today advising for retirement is very different than it was 10, 15, 20 years ago, because today you have interest rates that are low and going lower. You have a market that, even though it's down, is still really at its all-time high. Real estate is off the charts still. So where do you invest? So it's really important that there's kind of like new rules for new times, and you really have to start earlier today. But the real thing is, since we can't expect a lot from our money anymore in terms of what it's to give us, we have to demand less from it, which means you have to own your home outright. You have to cut back on your lifestyle. You can't take Social Security till you're 70. You should work till you're 70. And that may sound harsh, but those are the realities of today's retirement.
What if you have stocks in your portfolio? Because most financial experts will say you want to stay diversified even as you get older. You just want to change the mix, right? If you're invested in stocks and you're living at least partly off your principal, and the Dow goes down 1,000 points and then goes down again the following day, what do you do?
So in the book, and I am absolutely pushing this book because this is my 11th book and it comes out today. And so why does Suze Orman write another book when I haven't written one for 9 years? And it's just about that. It's when you are invested in the stock market today and you are taking out 4% a year to live on, you're going to find yourself in big time trouble if these markets keep going down and you're taking out money. So you should have, if you are doing that, at least a 3-year emergency fund. I am not kidding. So that as the markets go down, you are not taking it from a market that's going down, you're taking it from your cash. That's what you need to do. So we're not diversified in the correct way. Bonds will probably keep going down. And so you're far better off, rather than locking your money up in a bond, why not just put your money in a high yield savings account where it's liquid, that's actually paying you more right now than the 10-year treasury that's at 1.3.
Yeah. Well, I want to stick with diversification.
All right.
And maybe 60-40 is dead here, but so having a savings account, maybe annuities, anything else you can recommend?
Yeah, actually, 60-40 is dead. It should probably be 75-25 stocks, believe it or not. Stocks, if you also have enough cash to get you by.
Said 3 years of cash, so that's a lot of money.
That's a lot, and people are like, whatever, but where else are you going to put it right now, really, if you're going to retire? The other thing is that I don't have a problem with income annuities. People...
You used to.
No,
1998, and they were variable annuities.
Right. I still do not like variable annuities.
But deferred fixed income annuities as a portion?
Or immediate annuities, believe it or not, because people need an income that's guaranteed to them. And they're not finding it anywhere else. So it's almost like Suze Orman has been forced into looking for alternatives to what she would normally do to get people, how are they going to meet their expensive styles, right? And it's not even expenses, but they're expenses when they don't have the income. They don't have a pension anymore, so most of them only have Social Security. They might be able to take some money from their 401ks, depending what's happening in the market, right? So you should at least be in dividend-paying stocks or ETFs to absorb some of the things for when the markets do go down as well.
So lots of really great advice. How do people put it into action? Because I think on a day like today and yesterday, when there's a lot of fear, a lot of people, they get good advice, but it's at the decision point, you can't quite do it. So do you get an advisor, someone else to do it for you? Do you use some of these new AI tools? How do you get your emotions out of it at the point of decision making?
You kind of automate your investments by yourself. I'm a firm believer in dollar cost averaging, especially at a time when the markets are all over the place. And the truth is, if you have 10, 20, or 30 years till you need this money, let's say you're 50, You still have 20 years. You're 60. You may even have 10 years. If you're going to follow my advice and not retire till 70, you should wish and pray and hope that these markets go down. These are the best things that could possibly happen to you if you are dollar cost averaging, which means you take a specific amount of money every single month and you invest it. If you do that and the markets are going down right now, if you had done that in 2007, 2008, oh my God, and just continued on all the way through to now, you would have made a fortune. So to answer your question, you have to set up an amount of money every single month that you're going to put into these markets, and you keep doing it if you have time on your side. 10 years or longer, and you keep doing it month in and month out.
Speaking to the 50 to 70-year-old
Yes.
sect, 60-40's dead. At what age points should you start diversifying? You said 75-25 for stock, but at what point should you start breaking apart the portfolio so that you're setting up those anchors that you've mentioned?
I'm not sure you should break up that, believe it or not, especially when interest rates are so low. Because I will always believe that right now you're getting a higher interest rate on the SPDR at 1.7% in the VTI ETF than you are in a bond.
Yep.
And you're getting growth, and you're getting their earnings coming in. So you need money growing. And I'm an avid believer in stocks. And if you do it correctly with the right mix and some bonds, but it's very, or some cash giving you a high dividend, a high interest rate of 2% right now, which you can get. Credit unions. There's a credit union just the other day that was giving 3% for a 1-year CD.
It's kind of amazing that 2% is high.
Considered high, right? Yeah.
Right?
Yeah.
But you have to know how to invest in this type of environment, and what can you do so you take the fear out of it. And a lot of it has to do with reducing your expenses. Make sure you pay off the mortgage on that home. Make sure you don't have any debt. Stop leasing cars. All of these things you need to know.
So good to have you here. The book is out today.
The book comes out today. It's in audio as well, and we have a PBS special on it February 29th, starting throughout the United States.
The Ultimate Retirement Guide for 50 plus. Author Suze Orman. It's always good to see you.
Thanks.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.